With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Monday afternoon, we made it to the end of this session. Great to be here with you for the COB. I'm Nadine Blaney. I hope you had a great day. Look, the market, it was a bit of a meh all day, wasn't it? Pretty much flatlining it to finish the session. So on your screen is a picture of the CBO Australia Index. I can tell you, as the last of the day's trades go through the S&P ASX 200, it is sitting at 8,362, 0.01% higher. So we will see. Now, don't forget that we do have US markets closed tonight. So perhaps one of the reasons why we've just been bumping along throughout this session. We'll run you through the sectors in just a moment. One of the biggest weights on the market, though, fair to say, was the banking sector. And of course, market participants trying to get a handle as to what Donald Trump will say on trade next. Interesting, though, was just listening to an interview my colleague Andrew Geoghegan did with David Scott from StoneX. Scotty saying, look, Donald Trump has proven that he's for blinking. Today, even after talking really tough against the EU when it came to tariffs, talking about a big tariff being being put on the EU blanket from the 1st of June, he did back down, saying that the tariff delay would happen until July 9th. That was a 50% tariff. So there is this continental drift happening. I mean, it's real between the US and Europe, but Donald Trump is blinking. In fact, my guest on the call today, Luke Laretive from Seneca Financial Solutions, is saying that he reckons the Aussie market is doing relatively well, even with all of this trade uncertainty coming from the White House, that nobody really trusts Donald Trump anymore. At least he was saying he didn't. You can catch that episode of the call. It's online, ausbiz.com.au. Now, today, a feature of the market, as it was on Friday, were these uranium stocks going gangbusters as the United States increases its nuclear energy capacity by 2050. So really setting a light under some of those uranium stocks here locally. I had a really good chat with Heath Moss from HLM Investments about just that. And you can find that online. He gives us 3 ways that he is playing the uranium thematic, which he's pretty keen on as well. And I got some comments actually on uranium from my call guests today. So Luke Laretive and also David Lane from Ord Minnett. Now, M&A Monday, the big one being Wisetech. Stock of the day, we'll get you across the detail in just a moment. It is a blockbuster, $3+ billion deal for a US listed logistics company. Is it foolhardy when there's so much going on at Wisetech? Well, again, my guests weigh in on that one. We'll take you there shortly. Back to the sectors, though, of the day. And I mentioned that the banks had a pretty tough go. I mean, it wasn't across the board. Looking better, though, some of those in the tech space, including Wisetech, up by 5%. So growing its market, adding 500,000 enterprise customers. Questions are being asked, but it also did reiterate its full year guidance and said that it will provide a strategy update on FY26 come August. Xero also on the call today. There are those uranium plays, so really big gains for the likes of Deep Yellow, Boss Energy, up by 7.75% as well. So Elders was out with its half-yearly report, tumbling to a 3-week low on an earnings miss. Oh, on the M&A front as well, Genesis Minerals enters into a binding agreement to acquire the Laverton Gold Project for $250 million. Origin Energy, meantime, has lifted the lower end of its guidance for its energy markets division to reflect operational improvements, but its Octopus UK business not doing so well. Bell Potter has cut the price target on SGH over in moderation in FY26, but the earnings growth outlook has risen for EVT. Morgan Stanley has lifted its price target, calls the stock undervalued, and Duratec falls It updated the market on Friday, I think it was, and Bell Potter has cut its annual forecasts on a pretty downbeat outlook. All right, my guest today, it's a Monday, it's Josh Gilbert joining us from eToro. Hey, Josh, nice to see you there. So when you look at the market today, I mean, it's pretty lackluster, fair to say, but it could have been worse, I think.
Yeah, great to be with you, Nadine. I think we took a lot of optimism in today's session, really coming from, the news of Trump looking to sort of negotiate again. I think the overarching theme that we're sort of getting from investors at the moment is that there's more optimism here than maybe negativity. We know that Trump is very reactive. We've seen that throughout the start of this year. But ultimately, he is looking to strong-arm nations. He's looking to bring them to the table, and he is willing to negotiate. I think that's the biggest thing. He can talk a big game, but ultimately, the view that we've got with China, the 90-day pause, and then today with the EU, clearly, he's looking to sort of get what he wants. So I think that from an investor perspective, yes, last week we saw a bit of weakness in markets. That probably came after we had a very, very strong run, very much a risk-on sentiment from investors, certainly buying the dip, from that April low. And I think what we're sort of seeing is that, investors are maybe thinking that the worst of this sort of trade war is behind, that we are probably still going to get a few bumps in the road, but ultimately, Trump is looking to negotiate, and that's really important. So I think going forward, a lot of it's going to depend on, obviously, how those negotiations involve, because I think, let's be clear here, right? These are pauses, these are sort of truces. The risk is still there. We need to see some structural changes come into these tariffs. As I say, they're all well and good having these sort of pauses, but we need some agreements to sort of come into place, I think, to sort of really keep driving this market higher from here.
Got it. Thank you. Now, when I'm thinking about what else is likely to happen this week, Donald Trump aside, hard to know what he's going to say from one day to the next, but we do have NVIDIA's results that are due on Wednesday. What are you expecting?
Yeah, it's the biggie. Yeah. The last Magnificent Seven stock to report on the earnings calendar, but arguably probably the one that's most watched, right? If we look back to sort of Q4 earnings at the start of this year, we had Jensen Huang sort of saying that demand for the Blackwell chips had been amazing. They were seeing billions of dollars worth of sales in the sort of the current quarter that we're expecting now. I guess that big question is that going to translate then into results this week? I think that obviously since the call, we've had a lot of question marks over tariffs. We won't talk on Trump too much again, but again, that has obviously affected NVIDIA. We know that they're going to get a $5.5 billion charge in the quarter as well for exporting chips to China. We're obviously going to want to hear more from them when it comes to tariffs as well. But I think a lot of that, we already know, markets have priced a lot of that in already. Yes, the share price has sort of rallied about 30% since that low in April. But I think the big news here, and it will be commentary. We want to hear about how they're looking to navigate those exports to China. Have they sort of started to develop those new chip variants? That could, potentially offset sales going into the second half of the year as well. And I think there will be this overarching feeling as well that maybe there's a little bit of concern if that we do see a bit of a slowdown in the global economy. How is that going to affect chip makers? How is that going to affect demand for sort of AI? But I think that given the position that NVIDIA has, given what we heard from, big tech in the quarter, I don't think that we're going to see too much reflection of that just yet. Blackwell chips, we know, are now in sort of full production. Big tech is spending more money. They all pretty much increased their capex already in the quarter. So that's going to be going straight to NVIDIA. Margins were a little bit weaker last quarter. That came from the view of ramping up the sort of the Blackwell production. But we think that that's going to be sort of being able to offset. We think they'll be able to sort of move through with pricing power. We think margins will sort of pick up from here as well. So I think that demand is soaring. We've seen that from the Magnificent Seven names already that are basically spending all their money with NVIDIA. So we think it will be another strong quarter. Again, guidance will be important. Can they up that on views of the Blackwell chips? And maybe the downside, we think maybe from some weakness might come from any chatter around issues in China or tariffs.
Yeah, okay. So that's NVIDIA. We'll be listening and watching for all of those key points with much interest. What else do we have on this week, Josh? When you're thinking about the big, potential risk events, what are they?
Yeah, locally, I'd say we've got a couple of big economic data points to look at. We've obviously got that monthly CPI figure coming through. Maybe not massively important on the surface, given that we always tend to look at those quarterly numbers. But I think from what we've heard from the RBA recently, with that sort of rate cut coming through within the sort of the last week or so, I think that it's going to be in focus. Nonetheless, we also get retail sales data as well. But yeah, I think that CPI data is going to be sort of very, very important. We also get inflation data coming out of the US. Actually, in the US, it's PCE data. So that's the Fed's preferred gauge of inflation. So what we're sort of really looking at when it comes to inflation data, I think particularly more so with that PCE data, is are we starting to see that flow through from tariffs? We think that there will be an early sign of that sort of tariff flow through coming through into inflation, particularly on the goods side, although that is likely to be offset with some weakness coming through from services. We're constantly seeing that the services inflation sort of coming down, so a bit of a balance there. But I think it's going to be really important to sort of have a look at those tariff exposed goods to sort of see if that's going to sort of translate then into higher inflation for longer. I think if we look at market pricing for Fed rate cuts, we're not sort of seeing a rate cut now until sort of September. That's about a 65% chance of a rate cut in September. And I think that's essentially pricing in enough time for Jerome Powell on the board to sort of see this impact of tariffs. Is it having an inflationary impact, or are we going to sort of continue to see a softening in PCE data, and it's actually not having the impact, the inflationary impact that maybe the Fed had expected? So I think that will give them a bit of time. And I think the important thing there is flexibility. But I think, if we're looking, locally, sort of, CPI data and retail sales will probably dominate the sort of the macro calendar this week for sure.
Well, it sounds like we're going to be busy as per usual. Hey, Josh, I couldn't help but notice that you were in the Middle East lately. What were the big thematics that you were covering with investors there?
Yeah, absolutely was. Yeah, brilliant time there. I mean, look, it's such an exciting region, absolutely thriving. Really, we're sort of seeing the region as a bit of a safe haven. So I think a lot of investors in that sort of region see it as slightly insulated from what's been sort of happening on a global scale. Has really great diversification benefits, really looking to sort of move away its sort of dominance from oil from a GDP perspective, from an economic perspective. And markets there have been sort of overlooked for a long, long time. Access to those markets have been quite difficult. But a lot of the stocks in the region, some really exciting assets there, particularly around sort of real estate. When you sort of get there, it's captivating, the sort of sheer size of what's being built there as well. And some of the sort of big developers in the region, shares are up sort of 70% in the last year, and paying sort of huge dividends. Some of them increasing their dividend payments by over 100% within the last year. So as I say, I think investors are really seeing the region as a safe haven. Plenty of opportunity there, from not just a perspective of something like real estate, but as they're sort of diversifying that economy, lots of growth targets around tourism. Disney obviously just launching or announcing a new park opening up in Abu Dhabi. So again, lots of opportunity in areas of the market. So I think it's a market that's a little bit underloved, but will certainly be capturing investors' attentions over the years ahead.
Yeah, that's so interesting. And was there a lot of interest in crypto there? And especially as it was resetting those record highs, I suppose, last week?
Yeah, look, I mean, fintech is absolutely at the forefront. Obviously, we've had President Trump there within sort of the last week. They've Abu Dhabi sort of committing to building the biggest AI data center hub outside of the US. Trump obviously looking to invest a lot of money. Both sort of regions in the UAE, across sort of Saudi Arabia, across Abu Dhabi, Dubai, committing a lot of capital. Putting together lots towards sort of growth, and again that comes from sort of fintech as well. So yeah, Bitcoin and crypto absolutely something that's thriving there. They've also just put together a new framework in the region to be able to sort of pay taxes and fees through cryptocurrencies. So certainly sort of at the forefront of development. And of course Bitcoin hitting a sort of a new record high, and ETF flows. And I think the biggest thing that we're seeing this time around from previous cycles with crypto is that we're sort of getting a crucial shift in who's buying. And I think that's coming from institutional participation. That's front and center. And again, in that region, you've got those sovereign wealth funds with trillions and trillions of dollars who are also looking into this much more than they ever have done before. So I think it won't be too long until we sort of hear an announcement of a $1 billion buy from one of those cities.
Wonderful. Hey Josh, I'm glad I asked. Thanks for joining us today. Have a good one.
Thanks so much, Nadine. Have a great week.
Take care. All right, I mentioned that the stock of the day was Wisetech. It's made a $3+ billion Australian dollar acquisition of E2 Open. I spoke with David Lane from Ord Minnett, and Luke Larative from Seneca Financial Solutions.
Stock still looks expensive to me, and certainly I don't think this really adds any more incremental earnings. It really just adds risk at this point, and I think that board and that business have got enough to worry about and sort out before they need to be adding, additional complexity to the situation. So market might like it, but not for me.
And perhaps this acquisition actually says to the market, well, the business is much bigger than just one person, and that we do serve customers globally. We are profitable, we are making money, and we do have the ability to expand broadly. So I think it may well send a bit of a message to the market to stop focusing on the governance issues and start looking at the growth. So, yeah, I actually think it's a positive move. We do have a buy on the stock. We've got a target price of $124.
So Wisetech shares did all right today, not the market leaders though. Let's take a look and you can see that there is a distinct theme. So we had the US executive order, 4 nuclear focused executive orders. In fact, the most aggressive US intervention in nuclear energy industry in decades, according to Jefferies. So it is saying that it could boost uranium demand sharply. And so this is part of the reason we're seeing these shares, Deep Yellow, Paladin, and Boss, lift so significantly. Light & Wonder is looking good as well. It did update the market last week. Elders down on that half-yearly report. Mesoblast, a very volatile stock at the best of times. HMC Capital and Origin, one of the worst performers after giving that market update. Macquarie Technology as well, off by 4% to $58.65. 4D Medical made an announcement this morning. Can't remember exactly the details, but check it out. It's up by 15%. Alligator Energy, so another one of those uranium plays. And Lotus Resources, I'll give it away. It's one of Heath Moss's picks. If you'd like to find that interview, it's up online. Now, on the next page, we've got some of those that are suffering still. OFX, further sell down of 6.5% to 72 cents per share. And Bougainville Copper down by 13%. So it's Memorial Day in the US, markets are closed. It is a bank holiday in the UK, markets are closed. And we will be hearing from ECB President Christine Lagarde. Now here tomorrow, we do get ALS, ahead of its results incidentally. Jefferies has reaffirmed its buy rating on the company. And we also get BOJ core inflation year on year. Alrighty, we have seen this session come and go. The curtains are down. It is an absolutely flat finish for the ASX. Don't see that very often. 8,361, 0.00% of a change. We'll be keeping our eye on what happens with the remainder of the session in Asia. A little bit negative, more negative in China than it was here most certainly. And we will be watching, what comes from Memorial Day and if the true social account of the US president gets a workout. Look, we really hope you have a good evening. Thank you for joining us throughout the day. Don't forget to catch up online with anything you may have missed. And don't forget to register for our 3 Stocks for virtual investor event. Starts at 12:30 this Thursday. It will be a festival of buys if that's your thing. Stay with us.